Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Wednesday, October 24th, 2012. I wanted to start off by looking at the waves, the Triton waves, on a weekly basis. And you can see this graph. I have data that goes back to just 1997, so not a lot of data. Well, 15 years, but it's enough to show you what I want to show you. Okay, this is a weekly graph of the S&P futures, and you can see where it came up to this inside trend line here. Squeeze that down a little bit, going all the way back to October 2011, coming all the way back up here, and it never got above, it never breached that, went above that trend line. Okay, so now we draw a parallel trend line that starts in June of this year and hits the bottom here in July, and now we're right at this crucial point right here. This is a weekly chart. Now it's significant, number one, because it's a parallel trend line that fits perfectly right in here. Now we stopped right at the trend line. Right now we're up 5 points on the S&P. It is 2:30 a.m. on Wednesday, October 24th, when I'm doing this right now. So this is a live chart. But more significantly, I wanted to take a look at this line here of 1421. This right over here, this yellow line, 1421 on the S&P. Now, the reason why this is significant to me, and I've been looking over this, I was looking at this today to see whether we've breached any major barriers here to the downside. So I drew a line from this top through the this top on March 26th to this top on August 20th, and then this candle right here is the Bernanke Draghi push. These two lines in here, and then it went sideways with the Chinese and the Japanese infusion of capital into the market. And then we went up to this trend line and knocked against it and came down. Okay, why is this significant? It's significant because this line of tops right here that just got breached in the last 2 trading days or last 2 out of 3 trading days, was this top here. And let's go back and see how significant this is. This just drops down here. And we have to go all the way back. We're going back into, let's squeeze this up a little bit. Okay, now we're back into 2009. Same top, 1421 right here. Not only is it the same top that you can see right here, but it's the same, this head that was produced all the way from August 2006 all the way up to the top. It rode this line of 1421 for 1, 2, 3, 4, 5, 6, 7, 8 weeks. Went up a little bit, came down below it, came back up again, and then slammed into it before it produced a head and then a right shoulder, came down to that area, and as soon as it breached it, it went all the way down to the next level that I'm looking at, which is 1267. Now, it may seem like, like this is impossible to happen, but that's the line of tops that I'm looking at. And let's see how far, if it goes back any more than that. I think that was it. Oh, nope, it does go back further. Okay, that same 1421, you can see all the way back to July of 1999. When it went up there, stayed for a week, and came back down there, went through it, came back down again, went through it, came back down again, went through it, and then spent about 5 weeks right in that area before it came down in October of 2000. And then it was a steady stream all the way down, and it took until, okay, let me see, that was that was May 2001 when it okay, I'm sorry, looking at the wrong line here. All right, October 2000, it broke that, and then it took until December of 2006, 6 years and 2 months later, to come back up to that level. It stayed there for about, looks like 2, 4, 6, 8, 9 weeks, and then came down, hit it again, bounced off of it, came back down again, and January 2008 went down, and basically it just stayed down until it started flirting with it again in May of 2012, came back down, and then flirted with it again. Here we are again, all over again, since 1999. It's the same play over and over again. And more significantly, it got rejected in March and April of 2012. It came down a little bit, got rejected again, came down, and the only reason it was going to come down again right here in these 3 weeks of play, the only reason it got rejected, I'm sorry, the only reason it got the push to the upside to get through it was because of the infusion of money from the Fed and the ECB that pushed it ahead. It lasted for about 1, 2, 3, 4, 5, 6, 7 weeks, and now we are down below it. Okay, so that said, if we do a Fibonacci, well, let me draw this for you so you see what I'm drawing. If you take the bottom of the Fib tool and you go to October 2011, 1 year, and you come all the way back up to here and to the top, right here. The 50% retracement is 1271. Now, why is that significant? Let's draw a line of tops there. 50% retracement is this notch right here on the candle of June 2012, which was the high back in October 2011, and it did a dance. It went through it, bounced off of it, came up, bounced off of it, came up, and then went down. Let's see how far back this goes. This line of support all the way through here before it broke down. This goes back there, goes back there. This line of support. This is like November of 2005 to July 2006. So basically 7 months flirting around this area before it actually took off to the next level. These are very, very significant points. Okay, again, it came, let's start from the beginning. Let's start from the beginning of the chart where we have, okay, it went up. These are the two lines it's bouncing between. The 1267 went up to it, came back down to the 1267. I went up to the 1421, came back to the 1267. Now these are weekly, so this is actually taking a long time to do this, but I just want to show you the general direction of the market. It stayed above it for a long time, came back to 1267 again, came back down, 1, 2, 3, 4, 5, 6 weeks down, 6 weeks up, just barely got through it, and then cracked into all the rest of most of 2001. Yes, 2001, and it never really came back until we came all the way back up to this line here in November 2005, and then flirted with it for a long time and then took off. So these are very, very significant points of inflection on buying. Who has the supply of stocks and for how long they've been holding them. Okay, now I brought up a daily chart. Now this is the Bernanke burst up here that went. This is the Bernanke burst, this is a Draghi burst. Now this is the 1421 line, very significant. It went through it, like I say, like a knife through butter on yesterday's trading. It was down 21 S&P points. It was almost nothing the day before. The day before that it was down 27. There's some very, very serious selling here. We are, number one, we are below the trend line. Number two, we are below 1421, which I just showed you historically goes all the way back to 1999 as resistance and support. Number three, if we move this in a little bit tighter here, let me see, what's the best look? This move, we are at the bottom of the candle of the Bernanke push back in September 6th, 2012. And we hit that today. It bounced a little bit. It's trying to bounce overnight. It was up 700, 800 points at one time. Let me see, the high was 1475. So it got up there, and now it's turning around on weak, basically flat European trading, and most of Asia was down overnight. So the point is that we have taken out the only reason why all this buying for the last month and a half existed was the promise that there was going to be more cash in the society, more cash in the economy. Sorry, for the society. So my thinking here is that since the VIX has started moving like 15%, 13, 15% today, 2 days ago it was like 13, 14%. The VIX is on a run, and I will show you the Triton waves that support that to the upside, which means there's more volatility, which means again more signs that the market's going down. So this looks like a triple crown. One top, two tops, three tops. I've given this a name. It's named after Ben Bernanke and Mario Draghi. It's called the Ben Draghi crown. Now, in order for this beautiful crown, and this is the left shoulder. This is a massive month and a half crown, and if we're lucky, very, very lucky, it'll go sideways to up to the 1421 for 2 or 3 weeks. If we're not lucky, then it comes down to the 377 exponential moving average at 1326. Now let's see where from the beginning, let's go back and look at where the 50% retracement is for the move from October of 2011, and that puts us back to 1271. So if you remember what I just said with the weekly, it's spent a lot of time between 1267 and 1421, and the 50% retracement is right in that ballpark, which is the low for June 5th, 2012. So just beware that this is a possibility in a panic situation, that this could just roll right over, and within 5, 6, 7, 8 trading days, it could be down to 1326 at a minimum. Okay, one more thing that I wanted to show you on the daily on the left-hand chart was that wave I'm sorry, not Triton wave number 1 is now completely below zero. The green wave is minus 2.4. So complete change in the direction of the market. Overnight stuff can be tricky. Whatever bounce we get to the upside is completely shortable. I don't know if you're going to get that chance tomorrow because it's already moved a third of the way up the candle from yesterday's trade and the overnight trading. So we may get a push up to 14.19, maybe not. There's a lot of Apple's coming out with earnings. Amazon's I made a mistake and I thought Amazon was coming out on Monday. It's actually coming out on Thursday. So Amazon's coming out, Apple's coming out, and I think we have FOMC meeting minutes tomorrow. A lot of stuff's happening. All right, let's take a look at some stocks here. All right, Goldman Sachs. I like the fact that all the waves are to the upside. So since T1, 2, 3 were below zero already, I called for a counter trend trade using puts down to 120. Well, it was when I made this call, it was selling for 123.95, and it happened very quickly. It happened on Tuesday's trade. In fact, not only did it go to 120, it went to 118. So anybody who was in that, you should have been out of it, or at least half out of it, right at the 377. Excuse me. And wait for this to retrace a little bit. But now that I'm looking, I said there was a possibility that it could even come down to the 115, and according to the daily, it looks like it's headed right there. So you may get a retracement back up to 120. If you do, which is the 377 on the 21 minute, that would be a nice short right there into 115.82 on the daily. Okay, Apple. Apple was absolutely perfectly timed play. I said if you get when it was down at 609, I said if you have the opportunity to short this, if you're lucky enough to short this at 630, and it actually went to 635, so you would have been a little bit tight right there, but that's not bad, missing it by 5 on a 22-point move. Then you got in at 630, right at the 89 period exponential moving average, and you wrote it down for 17 points today. So this is coming very close to nothing that we can really see on the daily here. I think, let me see, Apple, hang on one second. Okay, I was just fishing around for the right day trading vehicle to trade Apple, and where I really like the 987, sometimes it's the shorter waves that look a little bit better. So I settled on the 377. And if you just traded the smaller wave, either the smaller wave T1 or T2, then if you just follow this, you give it a chance to open because it's kind of like waffly from the night before. And if you go to T2 here, and as soon as this breaks, then you're on the upside for 624, and then you use the smaller wave to get out. 630, you short it on the more conservative larger wave, T2, at 628, you cover on the smaller wave at 618, you go long on the longer wave at 620, and you cover on the shorter wave at 620. That wouldn't have gone very well. But like 3 trades and you broke even on one. And then you shorted it. You can either short it here or down here at 619, and you cover at 612. So very, very nice trading vehicle for Apple on the 377 tick chart using T1 and T2. Let's see, on the 377, okay, if you're using the ABC waves, then you'd use the B wave, and B wave to get in, cover on the B wave, get short on the B wave, cover on the B wave. So it's just a matter of flipping around and finding the right waves that work. But I just wanted to show you the difference between the B waves, the ABC wave, and the Triton waves. Okay, the last one I want to show you tonight is Netflix. Just to review it, it has a habit of popping up even though the long blue wave down here is significantly below zero on the daily. It has a tendency of just like moving up and around the zero line on T1, T2. Meanwhile, the better trading vehicle is looking at what's happening with the 21-minute on the A wave. This is the buy. This was a sell. This is a buy. Very short term. If you get on the long side, you have to know that you are going way against the trend. And when earnings came out, it followed the major waves on the bottom of the daily. So all surprises to either the upside or the downside are going to have a tendency of following the longer waves. And in this case, the C wave was below, the T5 was below zero, and the earnings came out, and the stock got slaughtered for 11 points. So this is going to open up around 57, and it closed at 68. That's all I have. Have a great rest of the, well, it's actually the middle of the night, so have a good day trading tomorrow, and good luck with your trades. And it should be extremely volatile. Keep close stops and keep an eye on the market. Don't walk away from it.